Good day, everyone. So, from our last class, I told you all that I'm going to elaborate on how to draw trend line and why we draw our trend line. So, why do we draw trend line? We draw trend line to show support and resistance. So, you know that market structure or market flow determines the highs and lows of the market. And from what I told you in the class, is best for you to get your directional bias from the higher time frame, not from the lower time frame. So once you come to your charts, the first thing you're going to do is for you to look at your chart, because we treat price action. So you look at your chart and you determine with your eyes what is happening. And once you determine what is happening, whether the market is in a downtrend or an uptrend, that is the first thing your mindset should be telling you. If the market is in a downtrend, you draw your trend line towards the moving downtrend. If market is moving upward, you draw your trend line towards the upside. That is how we determine our trend line. And now, trend line helps us to determine trend reversals also. Like maybe market wants to reverse, a particular currency pair wants to reverse. You will see maybe a breakout or some sort of reaction on the trend line. And once you spot it, the best you can do is to look for a retest. After the retest, you now take your trade. So from here we have market flow. What we mean by market flow is the chart direction, the entries and the exit points. A trend line can still give you that. Then how do we draw trend lines? We draw trend lines by looking at the structure of the market. And once you look at the structure of the market, you will know what to do. Like here, in every market, we have, once you spoke, let me go to 4-hour time frame. So once you come to your chart, if you're finding it difficult to determine the trend of the market from here, you can see that market is dropping down. It's dropping down. So as it's dropping down, this means that the market flow is downtrend. So how do you know that it's actually a downtrend? Because it's forming higher low, lower low, higher low, lower low, higher low, lower high or something, anyone you want to call it, it doesn't matter. Lower low, you see the way it's moving, then you can change it to your line chart. And once you change it to your line chart, it will be clear. You see that there are sharp endings. Look at here, look at this double top where the price starts when the price reversed, because it was moving in an uptrend before it now reversed. So as it reversed, you see that price will move a little bit high, move low. As it moves high here, it moves low, it moves high again, it drops, it moved a little bit. If you're using the candlestick, you see that it moved a little bit high, then low, a little bit high, then low, another high, then low, another high, then low. That is how you know that all these lower high, lower low, lower high, lower low, lower high, lower low, the term shows that the directional bias is downtrend. So assuming that it's going towards an uptrend, you see this place, price was going up here, and if it's going up, you see that price has been going from this particular point, from this point here. So price has been making higher highs, higher lows, higher high, higher lows, higher high, higher lows, higher high, higher lows, before you now form this equal highs here before reversing. And once you know that it's reversing, it breaks a structure here. It breaks a structure here. So this shows that market has changed structure. The order flow has changed. So what do? You wait for a retest around this area and take your trade down to the last point that you're seeing. So this is by the way on order flow and market structure. So how do we draw our trend line? So you see all these points that you're seeing, this higher place and this lower place, you determine them first, like assuming there's no part here downside, for you to know that this price will reverse. From here to here is what you're seeing. The outer part of this trade is what you're doing. You should not just force trend line. So when you tap on your screen by the right hand side, you see that icon that I told you about. You pick it, you go to your charts, you make sure that you start from the outer part low to the outer part high, and make sure the trend line is touching more than 3 swing points or 3 pivot points, anyone you feel like calling it. Then you make it as a channel. When you draw the downside, you draw the upside. Make sure it's tapping more than one or two swing points. So as you can see now, I've drawn this one, and you see the way price was moving as in higher high, making higher highs and higher lows, making higher highs and higher lows, and immediately it tap here, it makes another low, but it refuse to tap here, it refuse to tap, make another higher high, because it's supposed to, before you see it say that it will continue, it needs to break this high, this particular high that you're looking at here. Price needs to break it, but price refuse to break this high, rather it break the low. So what will you do? You wait for price to go down. After going down, you allow it to retest. After the retest, you can now take your trade from here. But if you're smart enough, but it's not advisable that immediately the price drops down, maybe you wait for like 3 candles to close below the trend line before taking your trade. Then your stop loss should be on this place that price refuse to break, because once price gets to here and break it, it's a continuation towards the upside. So every time you're trading, you should not marry your bias. You should not marry your bias, but rather you react to what price is doing. We react. Professional traders react. They don't marry their bias. So as you can see, it was a smooth move. It's moved from here down to this place, and it's still at that zone. So this is a very strong demand level. This particular place is a very strong demand level. So that's why price is dancing around here, still dancing around here. Maybe if you can see a reversal, we don't know yet. So that's why each time you're trading, make sure that you use your trend lines very well, like here, like this place now that has been going up you can still draw another trend line from this visible part here to this present place here. So in case if there is another reversal, what you will be waiting for is maybe a break towards the upside or a break towards the downside. Then either you continue selling or it breaks towards the upside, we now buy to this point. So that's how trading is fractal. It moves round, though it moves in a zigzag form like this place. See the way it's forming lower low, lower high, lower low, lower high, and then this range bound here, lower low, but inside the range you will see that it's still forming another lower low, and as it's forming it's dropping down in a steep move. You understand? So that's how it moves. So that's how we draw our trend line. So the concepts in trend line: look for points that are obvious. More touches are better. Trend lines are areas. You see the way I draw this upside, draw the downside. They are areas. They are not just lines or something. They are areas. So do not force a trend line. If you do not see anything to draw, leave it. It's not a valid trend line. But as swing highs and swing low changes over time, adjust trend line. Maybe as you're going down to lower time frame, you can still be adjusting your trend line. Maybe as the price is going from here, you've not gotten this part, you adjust it. Or maybe price moves down, you see another channel, you can still adjust the position. So trend line is very good. It's a very good part of trading, and it's best for you to use it across all time frame, but mostly the higher time frame is very advisable for you to get a clear move on trend lines, like 1 month, 1 week, 1 day, 4 hour, 1 hour. So the way we draw our trend line is very, very important. Just draw your structure by simply identifying the larger outer part, which is this point. Let me repeat it. Identify this higher part. Identify the higher part, which is the swing highs and the swing lows. Then identify trends, maybe on the weekly. If it's going down trend, 4 hour, like we are using this 4 hour now. If it's going in a trend, it's not something that is ranging inside like this. Like here, started from here and it ended from here for now. So it has not broken out from any part. So that's what you wait for. So identify impulsive and corrective moves, like maybe here or here, all this range bound, they are corrective moves. This is impulse move when it moves fast down. This is the impulse move, and then so that is it. So if there is supposed to be a reversal, you should know when it breaks out. And when it breaks out, there's something we call retest. Maybe price will come back like the way it's dropped here. It will go back inside the range, inside the channel, and now drop. Sometimes it will drop on the lower time frame, you might not see it on the higher time frame. Then look at it drop here, break this structure, break the second one, then now went back and start dropping. So you have to be very careful. There are other criteria that makes it valid, which we will treat in the next class, like liquidity, all this break of structure. Why is it breaking structure? Where is it going? Where will it go? How to take the trade? Maybe you take the trade after it break out. If you buy, how do you exit? These are very important, and we'll treat that in our next class. Thank you.